let's look at financial liability. It's more like the opposite of a financial asset. So here, what we are saying in essence is that it's a contractual obligation as well to deliver cash or exchange financial assets or liabilities under unfavorable conditions. So what you are doing is you are delivering cash this time around, not that you are receiving cash. And so the fact that you are delivering cash and nothing else gives rise to a financial liability. Let's look at examples. So this company has all these items on its financial position and wants us to tell whether it does have a financial liability or otherwise. Okay, so we start with trade payables. And so the question is, trade payables, are they financial liabilities or otherwise? Okay, so when you have a trade payable, it means that you bought goods from your vendor on credit. And the expectation is that you have to pay back your vendor with cash. And so because there will be a probability of cash outflow, then it means that what you have is a financial liability. So yes, trade payables are financial liabilities. Then the next one is contract liability, or what we call deferred income. The contract liability is simply the fact that you have received money from a customer for you to deliver a particular project. Now, because you have received money and you have to deliver a project, the outflow in the future is not cash. The outflow is the performance obligation that you have. That is what you are supposed to do, whether to deliver product to the customer or render a service to the customer. So because what you expect to do is not cash driven, it then means that contract liabilities or deferred income are not financial liabilities. No, contract liabilities are not financial liabilities. So the next one is loans and borrowings. Loans and borrowings is often common in companies that have huge projects or that actually need funds or finance in order to take on a particular project. So when you borrow money from the bank as a business, you expect to pay back cash, right? Yeah, so because of that, the future outflow is cash. As a result of that, yes, loans and borrowings are financial liabilities. Okay, so the next one is accrued salaries. Accrued salaries simply means that you as a company, you have owings to your employees. That is, your staff are yet to be paid. Yeah, so if you have owings to them, then it means that you're expecting to release cash in the future. And because of that, accrued salaries are financial liabilities. Okay. The next one talks about withholding tax payable. And I think we already mentioned that this is not a contractual agreement. It is a statutory consideration, and because of that, we do not categorize a withholding tax payable as a financial liability, even though you expect to give cash to the government. But the major thing is that it is not a contractual obligation. The next one is bonds issued. So when you issue bond as a company and you expect to receive cash because of issuing bonds, what you have is a financial liability. Yeah, because when you pay back cash in the future. Okay. So the next one is customer deposit. So when it comes to customers deposits, oftentimes you see this in the financial position of banks. Yeah, because what they do is they receive money from, when you make money and you deposit it to your bank counts it as an obligation because you will still come back to make withdrawals. And so what happens is that when the banks receive customer deposits, they treat it as a financial liability. Why? Because they expect to give back cash to the customers whenever the customers come back to collect their cash. And so it is quite different from what we talked about earlier in terms of a contract liability. A contract liability or a deferred income is that you have already collected cash. You only need to perform a service, not to give out cash. But for customers' deposits, you are giving out cash as a bank, because when your customers put in money with you, you take it as a financial liability, which means that you'll be giving out cash in the future. The next one we have here is deferred tax liability. And deferred tax liabilities, they are also one of the result of taxes as a result of our statutory obligation to the tax authorities. And because of that, deferred tax liabilities are also not financial liabilities. Why? Because they are statutory obligations. They are not contractual obligations. The next one here is financial guarantee. Now, a financial guarantee simply means that you are stepping up on behalf of somebody else to say that if this person defaults, I'll be the one to bear the responsibility of paying back the person's debt. And because there will be future cash outflows as a result of the guarantee, that is, as a result of you guaranteeing the other party, then it means that it is a financial liability. Why? Because there will be cash outflows. The underlying word is cash outflow.